Welcome back. You're watching Metropole Television. My name is Simba Elijah Charles Kiage. Now, most Kenyans who enjoy medical cover during their work life retire without any backup after parting ways with their employers. However, buying a medical cover at any advanced age is usually expensive to the individual since insurance factor in pre-existing conditions, impose a lot of restrictions and charge high premiums. Today, we talk to CIC Insurance Group to help us understand the insurance industry's performance and shed light on what they have to offer. And joining us this morning, we are delighted to introduce to the conversation Fred Roro, who's the Managing Director, CIC General Insurance Company Limited. Mr. Roro, good morning, sir.
Good morning, how are you?
Fantastic, happy to have you around. Let's begin from where we are in 2021. We know exactly what happened in 2020 in terms of the way that the insurance industry was exposed to performing. We had a lot of policy withdrawals, we had a lot of claims coming your way. Has that situation now corrected in 2021, or indeed we are stuck within that similar picture in 2020?
Thank you very much. What I would say is there has been a very dramatic shift, which I attribute to the vaccination program that the government has put in place. So our experience as far as COVID claims is concerned, it can be modeled against the waves. You know, when you have been listening to the government, you hear there is a first wave, there is a second wave. So at every time the wave peaks again, we get to see a lot of claims being reported. And as the waves comes down again, we see, but now we are finding the peaks are getting lower and lower and we attribute that to the government vaccination program. And we are encouraging our insured members to get vaccinated so that they can be able to manage the condition. Thank you.
Pretty much. So when you look at the way that the economy is performing in 2021, I mean, we're listening just the other day to the Central Bank of Kenya Governor Dr. Patrick Njoroge saying that things are looking up and we might rebound by around 6%. But we're coming from a contraction of a negative 0.3%. Are you also optimistic that indeed your industry is going to recover in tandem with the recovery of the economy this year, sir?
Yeah, when you look at the role of insurance, you know, insurance is a risk transfer tool. So, and you know, you insure either an asset that you have or you insure your health. And for you to insure an asset, you know, you must be engaged in some form of economic activity. For you to insure your health, you must have resources rather than just waiting for you to get sick and go to hospital. You pay the premium upfront. So in a sense, that means the improvement in the economic activity, in the economic environment, it will avail the resources for people to invest and for people to pay premium. So we are also equally optimistic, and we can't wait for the economy to get going so that we can also work with the Kenyans.
I like the way you're saying that you're quite optimistic and you're sort of waiting to work with the Kenyans as the economy recovers. But Mr. Roro, we do know that the biggest elephant in the room when we're talking about insurance in the country is that penetration, which we've tried to hit the double-digit figures. We've never been there, especially when you compare other economies across the region. I'm talking about performing economies or top economies. As the sixth biggest economy in Africa, you like to think that some of the areas that will be taken by now is the penetration of insurance. What do you think is the biggest undoing? And if so, then, has the COVID-19 pandemic changed the way that we do business? And if it's changed the way that we do business in this industry, is it going to improve the penetration levels?
I get you. The issue of penetration, of course, it's a big issue, and actually, how you see it from when you're outside the insurance industry, you see that there's very little penetration happening in the
Yes.
insurance industry. But again, when you come to the insurance industry, what we see is that it's the same customers we had yesterday, last year, but one are the same customers that we have today. So the bigger issues, the biggest undoing to respond to your question, there are two areas, and one area is awareness. If you are living in an urban setting, you have an asset like a motor vehicle or a motorbike, then somehow you'll get to know that you need to have insurance for that asset. But majority of Kenyans don't know that we do have other forms of insurances, and that is an issue which the insurance industry has been trying to address. The insurance regulator has been running an awareness campaign, going all the way to the rural towns and talking to people to just get them to be aware that there is insurance. The second issue is the issue of price, the cost. Despite being the sixth largest economy in Africa, we do have many more people, a bigger percentage living in poverty, and they have got more pressing basic needs. People are worried about food, worried about shelter, they're worried about clothing, they're worried about education, they're worried about health. So by the time they start thinking of acquiring an asset to insure their life and to insure their health, you find that doesn't take priority. So what we are doing as CIC is, first of all, to come up with products for every market segment, to be able to have a solution that is appropriately priced for each and every individual.
Yes.
Number two is the issue of communicating to the market. Like what we did last week, we launched a new product, and we have been able to communicate. And what has been very surprising is not just the new product, but the response from the people. And they indicate, I have a parent, I never knew I have a solution I could give them. I know somebody, we all know somebody who is 70 years who need health insurance, and it has been an overwhelming favorable response, which we do thank Kenyans for immensely. So the issue is awareness and affordability, and we are dealing with it at an industry level and also now at a business level.
Yes. Mr. Roro, I'll be coming back so that we can talk about that product and exactly what you're looking to achieve with it. Just before we get there, I mean, what we saw from 2020 as well was this conversation about digitizing the way in which we run our industries and even the basic corporations in the various companies within the economy. So talk to me about that. Was the insurance industry caught by surprise that indeed they need to shift to digital ways of doing business, or we were ready even before the pandemic? And talk to me specifically about CIC Insurance on that front.
Yeah, I would say for CIC Insurance, we were already very digital, and so to speak, we had moved a lot of our systems to the cloud, which means they were accessible anywhere and everywhere. So the question of where you working is not a question of where you are. You could work from home, you could work from the village. All you needed is internet connectivity. So the transition was quite rather smooth, getting the people to work from home and the staff. The bigger issue was also the customers. The customers who are used on one-on-one engagement. But however, we were able to now also encourage them to deal with us through not through the papers, but through online. So if you want to buy insurance, we digitized our proposal forms. You now fill and sign online proposal form. If you have a claim form, again, you do it online, and so on and so forth. We actually went a step further at CIC, and we automated, digitized and automated all our supplier engagement.
Yes.
CIC Insurance is the largest motor insurer in this country. And consequently, we deal with a lot of agents, intermediaries, and brokers. We deal with a lot of garages, because if your vehicle has an accident, we must have a garage where you take your vehicle and we pay them. We also have assessors. Assessors are the people who come to look at your vehicle after the accident and say, what is the scope of damage and how much will it cost to repair?
Yes.
And we also have the loss adjusters. These are the people who, in case of a fire, they come to look at your house and say, yes, your house was burnt 50%, how much will it cost, and so on and so forth. So all these people, all these interactions, we have taken them online. So if you're an assessor, we appoint you, you're able to get into our system through portals and do the job. And at the same time, the customer is getting a copy of the communication on each and every single step. So we went all out. We now pride ourselves to be a fully digital insurance company. We have automated all our operations, and our people are able to work. A lot of our staff are working from home. A lot of our adjusters now, we don't send emails to them, which is what we used to do. We just engage them through our own system. And that has also empowered us to track turnaround times, TATs, and so on and so forth.
Pretty much. All right, let's move on to this next one then. You have now launched a product called the Seniors Medi Plan. Has it become more apparent, therefore, that medical care has become more expensive as you age in the country? And what are you targeting with this new product, Mr. Woro?
Yeah, help within past 1 year. That other in ICU, that other person who has passed away. Healthcare in Kenya is a very expensive affair. And more often than not, you find it doesn't even matter which hospital you go to. Initially, there was a school of thought that you could manage the cost by going to very affordable hospitals. You know, we call them tier 2 hospital in our industry lingo. But nowadays, you find somebody has gone to a tier 2 hospital for 2 weeks, the bill is 2-3 million, fundraising, and so on and so forth. So insurance comes in and de-risks the financial impact of you getting unwell.
Yes.
In the sense that if you get unwell, we come in and pay you a hospital bill. So we do have solutions. CIC is one of the largest underwriters of health in Kenya. We had very strong solutions for companies and for individuals up to 60 years. But then we realized there was a market segment which was exposed and that could be served sustainably between 60 and 80. So that is the target market that we have for this particular product that we came up with.
Pretty much. So some of the questions that we've got around that area, number one, is it transferable? Let's just ask it directly.
Yes, it is transferable. As long as you are within that joining age and you want to move from one underwriter to the other,
yes,
then you can transfer.
What is the next question as well that we got around this area? What is the age bracket?
The maximum, you know, the way we do, the way the insurance scheme runs or
yes,
insurance program runs, is that we have the age bracket within which you can join. But then, who have joined within the age bracket, what happens? They go beyond the age bracket. So those are two questions. The first question is between 60 and 80 years,
yes,
you can join.
yes.
However, if you turn 80 or no, you can turn 80, 85, 90 when you're already inside, then you can continue indefinitely as long as you are renewing the premium. So if you are blessed, you are 100 years, you can continue being our insurer, and we look forward to that.
Pretty much. Last question as well. It's a direct question. I'm just going to put it the way it came in. Upon the unfortunate incident that one of the beneficiaries may have passed, are the contributions redeemable?
Sorry, you said they have a past what?
Yes, on the unfortunate event that the beneficiary has passed on, are the contributions redeemable?
Yes. So the question is, in case somebody has passed on. And,
yes, or the one who's a beneficiary.
Contribution. So what we do for people who passed on during the period of cover is that we do provide, there's a benefit. Before you even get to the passing on, I think you could enrich the discussion to see what benefits does the product have.
Yes.
And in terms of benefit coverage, the limits, you can buy a 5 million cover, that's the highest for inpatient, all the way to 300,000. So there are various categories within, yes, depending on your budget. That variation is to allow anyone with whatever budget to be able to onboard. So you find the product has coverage for pre-existing and chronic conditions. So assuming you could be if maybe things like hypertension, diabetes, maybe all those chronic conditions that people refer to. It has benefit for cancer. It has all those things which affect people, and which when you're between 60 and 80, you are more susceptible to. So the product is quite rich in terms of caters for gynecological surgery, in case, of course, treatment. We have very good relationship with all hospitals in this country, all good hospitals. So you just need to go to hospital and be treated. However, in Kenya, a lot of people prefer to be treated in India.
Yes.
So again, we do have relationship with hospitals in India, and every day for things like cancer or advanced surgery, you find people preferring to go to India. They because maybe they say because of cost or because of expertise. We don't stand on the way. We just facilitate you are going to India. Again, evacuation. In case you need an ambulance, sometimes a lot of people deteriorate because they don't get these ambulance services.
Yes.
You just call us. Wherever you are, we shall come. If you need an air ambulance as well, if you need a flight to come and pick you, we do have arrangements with flying doctors and so on. You just need to call our emergency number. So that is what I would say. Now, when it comes back to your question, if somebody passes away,
yes,
so that's unfortunate, but we do provide, the product has a funeral benefit. That is largely to cater for the funeral expenses. It is not a lot, maybe 100,000, 150, 50,000, but the product indeed do have a funeral benefit.
Pretty much. All right. Last one on that, before I ask you one general question on exactly what is the outlook of the insurance industry. There's somebody who's asking, am I not being the age bracket as a son or a daughter wants to contribute for the mom? Can I start now? And what is my minimum contribution in absolute figures this morning?
So, yes, you can buy insurance for your mom. Most of us do buy insurance for our parents. You find if your parent, your mom or your dad is 60, 70, probably you are now the one who has the economic power to earn a living, and there's nothing wrong with you buying insurance for them.
Yes.
And it is perfectly normal, and we expect you to do that. And you are welcome to do it. That's one. Number two, in terms of cost, it depends with the option that you choose. We do have the 5 million cover, as I indicated. We have various categories. There are about 7 categories, all the way to 300,000. So those categories, and also the age, because it's not one premium for everybody between 60 and 70. We do have, as you grow older, the premium goes up. So it's good to be a bit more specific. The brochures are readily available. You your insurance agent or your broker, we have already given information to them. They can give you a quotation as quickly as possible. Alternatively, you also reach to CIC directly, and we should be able to give you a quotation.
Pretty much. Now, lastly, therefore, actually, there's a question that maybe if we have time, we're going to respond to that. Now, Mr. Roro, in a minute or so, if you can, because we only have 2 minutes left this morning. I mean, as we approach the pandemic, we were already talking about how the smaller insurance companies in the country that were on the edge of capital adequacy at the onset of IFRS were really at risk of running out of business. Talk to us about that. With the impending IFRS 17, do we expect to see a little bit of shake-up within the economy? And are we bound to see a lot of mergers and acquisitions within this industry? Because there's also the biggest talk about how we are overinsured, probably.
Okay. I think there are 2 things to know about the question that you're asking. For us, and we find our regulator is quite hands-on.
Yes.
The concern that the regulator has about the insurance industry are 2. Number 1 is, are we treating our customers fairly? So that is 1. And number 2, do we have enough money or resources to pay the claims when they occur? So the issue of capital adequacy addresses the second issue. Do you have enough money to pay the claim when they occur? And the regulator has indicated minimum requirements that gives the regulator comfort and the public, Kenyan citizens, comfort that this insurance company is stable. There are minimum requirements and there are prescribed requirements. So what you find, a lot of insurance companies meet those minimum requirements. And I think you as a client, as a prospective insurance customer or an existing insurance customer, you need to have that comfort that indeed my insurance company has the financial muscle to pay the claims as and when they arise. Because if you don't have that assurance, you are as good as if you are not insured. So I think the regulator has done a lot of work making sure that the industry is compliant. So I do not expect any particular shocks driven by that issue of capital adequacy. The issue of IFRS 17 is an issue of revenue recognition, income recognition. It's a technical area, but the larger impact will largely be more on the life business rather than the short-term business.
Yes.
We might find a bit of significant traction around there, a lot of activity around there. There's a lot of things happening even right now. We expect it to go live in the year 2023. But again, our industry is quite solid. I do not expect material, something significant to happen, like Kenyans being exposed.
Pretty much. Okay, let's clear like this in 15 seconds. You have a customer, or you have a would-be customer in the studio this morning asking, I want to insure my phone. Is there a product like that with you?
Sorry, you want to insure my?
Phone.
Your phone, yeah, you bring it on. What we do provide insurance for phones. And,
yes.
How it works is, phone is one of the few things that you may have. So we insure phones under the domestic home insurance,
Nice.
So you insure the house. If you're the owner of that house, then you need to insure the structure.
That's it.
Like things like fire, things like flooding, things like earthquake. You need to insure that. Then you insure the content of the house. Now the phone comes part of the content, not just your phone, because you also have laptops. You have invested. And what people don't know, a lot of people in Kenya right now, is that the law requires you, in case you have a house help, and they get injured in the house, the law requires that you pay them, in case they die because of those injury, you pay them 8 years salary. And that is 8 years of the minimum wage in Kenya. So again, you find that house insurance also caters for such eventualities and so on and so forth. So indeed, bring on your phone. I'll be very happy to make arrangement to insure it together with your other valuables, including your home. Thank you.
Fantastic. I think you have a customer who's going to walk into your offices from Metropole TV studios today. Anyway, Fred Roro, Managing Director, CIC General Insurance Company Limited, thank you very much for taking your time to speak to us here at Metropole Television.
Thank you very much for having me, and good morning.
Good morning as well.